The broadcast is now starting. All attendees are in listen-only mode.
Well, good evening, ladies and gentlemen. We're a minute past starting time, so thank you for being with us today. And good morning to those of you who live in Queensland. Good afternoon to most of the rest of Australia, and good afternoon to our friends across the ditch as well. Would somebody please type in the question box how the volume is? Can you hear me all right? Hank, I know you're on the line. Can you hear me? Yeah, we can. Oh, good. Rob in New Zealand. Hello, mate. Gosh, it's been a long time. I'm glad to hear you with us. I hope you're well. I hope the markets have been kind to you. Going well, good on you. Thanks, Hank. Maddie, thank you. I meant to call you, and I'm sorry I didn't. I will get in touch with you next week, my friend. Okay, well, let's have a look what is happening in the world today. It's very interesting. I mean, we've had an enormous week. Those of you who are invested in US stocks, you're just rubbing your hands together every time you look at your retirement account because equity markets have been incredibly strong. So let's start to take a look at a little bit more detail about where they are and what they're doing. So let's move on here as we can. As you know, markets are rational, orderly, and sometimes predictable. Next week we're going to be talking about markets in some detail. This is a picture of the Gold Coast in Queensland, Australia, with the whale tail and main beach. That's probably actually Broad Beach in the background. All of the Gold Coast is just beach after beach after beach, the longest, whitest sand you've ever seen. And of course the whales swim up and down in the Pacific Ocean and do wonderful things. They're entertaining characters. So we've got a tutorial in the Gold Coast next week. Starts Wednesday afternoon with a meet and greet for a few hours, and then teaching on Thursday and Friday, and a group dinner in there, and plenty of discussion and hospitality as well. So for those of you who are coming, I'm looking forward to meeting all of you, and it'll be very interesting. I think you'll find a lot of stuff that you haven't had before. So there we are. That's where I'm going to be for most of next week. Sometimes in June and around September, you can see Migaloo. This is Migaloo. He's a 30-year-old male humpback whale. The just beautiful the legendary white whale. They call him Migaloo. And he was the one of the centerpieces of the Commonwealth Games that were held at the Gold Coast. Was it last year? Might have even been the year before. Last time goes so quickly. But Migaloo swims up and down the East Australian coast, but he comes very close to land around Byron Bay and the Gold Coast. The most easterly point is in Australia is there. You can see he's not far off, and we'll see him sometimes in May and June when he's going north on his annual migration, and September, October when he's going south on his annual migration. Quite a scene. There's another look at him. This was taken off Byron Bay, which is just about 55 miles, I guess, south of where I am, in 2018. Absolutely magnificent. It's awesome. So anyway, if we decide to have a tutorial at the Gold Coast again next year, we better try and have it in May or September so you can get to see Migaloo with any luck at all. So today, one of the things I'm going to talk to you about is divergence. Now, a lot of markets are correlated, and they're correlated in various degrees. Those of you who trade Forex will be well aware of that. When you, even if you're trading currency futures, you're going to have the US dollar on one side of the trade or the other. To the extent that markets are correlated, they generally move in the same direction. Correlation says nothing about quantum, but it says quite a lot about direction. all of our markets, most of our markets have a correlation with one or other. Sometimes the correlation's temporary, as it has been with gold and the US dollar index. That usually, or it doesn't usually, often enough, it runs on a negative divergence. That is, if gold's up, US dollar's down. If US dollar's up, it'll tend to push gold down. And we had a very, very long period of that divergence earlier this year. For almost the whole of the year, we've had that negative divergence in place. When that negative divergence breaks down, it's almost always in favor of a big move up in gold, which is what we saw earlier this year. So all major equity markets, the Russell, Dow, Nasdaq, S&P, and Germany's DAX, they're correlated to some extent. Most of them are correlated very highly. So we would generally expect, if we get a buy signal in one, it can be traded in any of them, provided the trade is actually elected. That is, means it gets to the number that we specify on the website, at which stage the trade will become active. Gold and silver are also, they're very highly correlated. Of course, as is gold and HUI. HUI, dollar HUI, is an index. It's the unhedged gold miners index. It's an index containing about 25, I think, gold miners that don't forward hedge their production. And it has a very, very high correlation with gold, and therefore with silver as well. So I'm going to start you off with a little bit of a history lesson to see that you can learn from the past, because that which is, has been, and shall be again, as Solomon said in Proverbs. If you want to see what markets do, it's worthwhile looking at what they've done in the past, and particularly the long-term charts. These charts we're going to look at now are all the 12-day charts. That is, each bar is 12 days of trading. And it gives you quite an insight. So we're going to start by looking at the last great top before this one, which was in 2000. Of course, we had another top in 2007, which we'll look at. But the .com top, boy, it was something, wasn't it? It was just a ton of fun if you were trading it. You can see that on the 12-day chart, the Nasdaq, this is the Nasdaq index, made its high in the fortnight, 2 weeks. I say fortnight. A lot of Americans in particular say, what's a fortnight? It's obviously an English expression that I've picked up. A fortnight is 2 weeks or 14 nights. So if you look at a 12-day chart, it'll be, the close will vary somewhat between markets a little bit. That's just a function of when the data from Trade Navigator actually commences, which is different on most of these markets. Anyway, here's the Nasdaq. It made its very, very dramatic .com high in 24th of March 2000. So from there, let's go on and have a look at the other markets to which they're correlated. This is the S&P at the .com top, and it made its high in April 2000, just not far away from the same time frame as the Nasdaq. Here's the Dow, which made its high earlier than the Nasdaq. So at the stage that the Nasdaq was making its all-time highs and gold was mimicking it, the Dow was actually trading lower. That's a classic sign of divergence. In the Russell, amazing how dwarfed 2000 looks now when you go back through these long-term charts. It made its high in March 2000, so Dow was the real telltale there, that it was the one market that wasn't conforming, and of course it's a vitally important market. With that divergence, then you've got the failure at the highs and the sell-off, and down it went. So let's have a look what happens after that. This is the .com low, if you like, October 2002. Nasdaq made its low in the fortnight of October the 9th, 2002. Here's the S&P. Now, it actually makes its low a few weeks later, October the 22nd, 2002. Now, this is a very important chart because I've got another date on it. You can see where the arrow is. That's July the 29th, 2002. And that looked, excuse me, for all the world like a serious low. And that market started to rally as the other markets were still going down. And it rallied for the best part of a month, and then it started to work its way down. And eventually it made a marginally new lower low in late October 2002. The point being that the July, I remember trading this, I mean, it worked so hard to go down. In July, end of July bar, that had everything about it to qualify as a valid low. The one thing that was missing was it didn't have confirmation from the other indices. And you can see that this market just couldn't complete its bottom and start a serious run until October, when it had synced, if you like, with the other markets. So I think this is the most telling of the charts because it shows how powerful the need for confirmation and the consequences of divergence can be. Here's the Dow. It made its low October 17th, 2002, and that's obviously what the S&P was waiting for. And here's the Russell that followed very perfectly in October 2002. We're using the indices here because for the Russell in particular, it's had a change of its futures contract. RT was the old futures contract for the Russell, which was traded on the ICE exchange. They've stopped with that, and the Russell is now traded on the CME, and the code for it is RTY. So it obliged. It made its low just when it was supposed to, and that's when you have that confirmation that all of those markets had the confirmation of a low in or about that period. I mean, remember, we're using long-term charts here. From here, we wouldn't take that as gospel. We'd then go down and look for confirmation and for valid signals on our daily chart. But you can see that when all of these markets had got the low in October, then that was happy days. It was time for the market to start rallying, which it certainly did. Have a look at this now. We can go to the high. This is the NASDAQ at the 2007 high. And what I've used here is the closing high, or the momentum high, if you like. And NASDAQ made its momentum high at the very, very end of October 2007. The S&P made its momentum high, closing momentum high, just about the same date, in that same fortnight period. And you can see it's just 1 day difference. That's just because the data has started at a different time. Here's the Dow. It made its momentum high October the 3rd, a couple of weeks earlier than the other markets, but right for a long-term chart, that's right in the time frame. So you have all of those three confirming one, confirming the other. And the one you didn't have was the Russell. And the Russell made its momentum high in July, 2 months earlier, 2.5, almost 3 months. Excuse me, in some cases earlier. And what was the consequence of that? We had a non-confirmation by the Russell at the high. Now, the Russell is not nearly as important as the other indices. It's the small caps index. But historically, as you've seen so far, we've looked at the biggest high in the lifetime of many of you, and the low, and we've seen that confirmation as opposed to divergent is very, very important. And you can see Russell here has shown the first meaningful sign of divergence, and then what's happened, the markets have started to wend their way down until they got low enough for everyone to get the message that this was a bear market, and then we had a nice little mini crash. In fact, it was great fun. Here's the NASDAQ at the crash low. Really interesting here. You can see that the real low is a month and a half, 2 months earlier than the momentum low, which came in March the 18th, 2009. So that's the bar, the downward facing bar, above what appears to be a higher low. But if you go back 1, 2, 3, 4, 5, 6, 7, 8 bars, you'll see that low had a higher close. So the March the 18th, that's the momentum low of the 2007-2009 bear market. So move on to the S&P. S&P we know all about. It made its momentum low on March 13th, 2009, and I've talked to you about that on many occasions. What happened with the Dow? It made its low, momentum low, on March the 10th, 2009. So if you're bearing in mind that these charts have a built-in sort of shift in them, because the periods divided into each bar in these charts is 12 trading days. So the periods where it ends at each 12 trading days, which is really the sort of the Daniel Code fortnightly chart, if you like, they're a result of when the data starts. So the original data, excuse me, on all these charts is slightly different. That's why these numbers are slightly different. But the dates are very, very close, as you can see, bearing in mind that ability of the charts to be slightly different because of their start date. And here's the Russell. March the 5th is its momentum low. Perfectly perfect. So we've now seen 2 lows where there's been no divergence at all. We've seen 2 highs where there's been significant divergence. The Dow was diverging at the 2000 top, the .com top, and the Russell was diverging at the 2007 top. So let's have a look at another market that's correlated. This is gold, and this is actually an 067 chart. So this is actually not quite correct, because the 067 charts are the back-tested charts. And what happens there is that Trade Navigator puts on the price of the front month completely accurately, but it then adjusts everything else, all prices that have come before that, either up or down, by adding in or taking away the premium or discount on the contract rollover. This is a futures chart, of course. So if you want to know what the true high of gold is, it's in the 057 chart. The 067 chart has overstated the price of gold, but nonetheless the pattern is accurate. So there was gold making its all-time high in September 2011. Have a look what silver was doing. There's September 2011 on silver. It's made its high some months earlier, and it's now making what is a lower high. And that eventually proves quite fatal to the market, and gold and silver start that big pullback, from the first sign of which was this divergent. It was there for a long time. It's there for 1, 2, 3, 4, 5, 6, 7, 8 bars, which is about 4 months. So divergence is not an instantaneous thing. It's not like one of our Daniel Code buy or sell signals. It's just what's happening on the long-term chart. It's an indication to you of whether the markets are healthy. And in this case, silver was certainly not healthy at that stage. Interestingly enough, here's the Hui. You can't trade this on futures. This is an index, so you can trade it on options if you wish to. But it's very strongly correlated with gold, which means it's also strongly correlated with silver. And you can see it made its high there in confirmation of the high in gold. But silver was the tell, and the lack of the lack of confirmation is classic divergence that brought these markets down. Look at the Nasdaq today. It's strong and roaring. Here's the S&P. It's strong and roaring. There's the Dow. It's strong and roaring. It hadn't made this new high when I created the invitation on Monday, but it has now. And here's the Russell. If that looks familiar to you, it should. That's a classic pattern of divergence, and it's pretty significant. Now, divergence, like the angular charts that I've talked to you about before, can be cured, but right now it isn't. There's massive divergence between the Russell and the three main equity markets, and that's possibly going to have some consequences. And if it does, you won't be surprised. So keep an eye on those indices, all of them, and watch to see if the Russell can cure its failure here, or whether it's going to start to infect the other big equity markets. Here's another view of S&P. It's pretty extraordinary because you can see that we stopped the DC trading channel back in about August 2014. And this market is still running pretty well perfectly within those extensions of that channel. 3.5 years, 5.5 years later. Extraordinary. Anyway, here we are, and I've been telling you that the S&P was actually in a failure pattern because it had divergence against the angular chart, which just controls these markets so much and so precisely. But as you can see now, it's working very hard to cure that divergence, and on present indications, that divergence would be cured with a trade around about 3,200 or a little bit more. That's the upper dotted red line, and once the market gets there, it will, obviously it's at an all-time high already on the lateral view of it, but on the angular view, which is equally important, it would have cured its failure. But it is in a failure pattern at the moment. It's a potential failure to confirm the price. So those of you who have big interest in shares, and most of you I know will have retirement accounts and what have you, you ought to be very, very grateful to Mr. Trump. He's the booster-in-chief, and everything he does is a bit unconventional. He doesn't consider himself bound by too many of the niceties of political office. I mean, how many times prior to Trump have you heard a politician saying, well, we don't want to talk about interest rates, we don't want to talk about the US dollar, that's a matter for the US Treasury and the Federal Reserve. Well, Trump has none of those inhibitions. He just blasts straight in and abuses the head of the governor of the Federal Reserve for not lowering interest rates quickly enough. I mean, he's super aggressive about it. He is the number one thing got going for stocks at the moment. So if your 401's looking great, he's the guy to thank. Which means that you then have to start worrying about, is he going to be around after next year? And that's a very interesting question, because I mean, I love American politics. Mainly I love it because it doesn't affect me, but it does affect it in the long term. It affects everyone in the world. Trump has done a great job, whether you like the guy or not. He's done a great job of boosting the share market, and always pressuring the Fed to do more, and it's worked. Some of it's worked. So what happens going forward? Well, really fascinating. You've got Elizabeth Warren, who you might think is wonderful. Her policies are so ambitious that they're really over the top. I mean, there is a level of reality needed to be injected into these things. But I guess if you're running for a nomination, you say what you think your supporters want to hear. But I don't know how she can, with a straight face, say that she supports capitalism, because big difference between her and Bernie is Bernie says I'm a socialist and Elizabeth says I'm a capitalist. Well, honest to God, I can't see much of the capitalist in it, to be honest with you. To me, I think it's socialism, and I think that gives. Incidentally, don't get all freaked out about socialism. Australia has a huge amounts of socialism. We have socialised medicine, socialised housing, all sorts of things, and a lot of those sorts of ideas, socialist ideas, are very beneficial, very beneficial to the people that they're targeted at. Medicare for all, if it worked, would be a wonderful thing. The problem is how you're going to fund it without massive increases in taxation. Now, I know that the Americans think they're highly taxed. Let me tell you, on a world scale basis, you're not. You're getting off at about 30 cents in the dollar. And if you want to see socialised medicine working, have a look at what happens in Australia. It's quite fantastic. Everybody gets really good medical treatment all the time. And at the same time, we have a private insurance option. So if you don't have any insurance, that's fine. You don't have to pay a penny. Go to any hospital you want. They'll get you treated promptly. Great conditions, excellent doctors. Couldn't be better. You'd be lucky to be an Australian. The healthcare is fantastic. For people like me, I have health insurance for my family, and that means that I don't have to go on a waiting list. I can go to the private hospitals, some of which are very big and world leaders in what they do, and I don't have to have a waiting list, and I can choose a doctor, which is really, how would I know who to choose? Like most people, I just rely on whoever the GP's referred me to. I'm an attorney. I'm not in a position to judge whether a doctor or a surgeon is very good or not. But anyway, look, it's a marvellous system, but the taxes you're going to have to pay to support it, have a look at Australia. I mean, you're on 50 cents, 50% at 180,000 a year. And that's just the start. For whatever you've got left, you have a 10% goods and services tax on everything else, on anything you spend money on, services, food, almost anything. There's very minor exceptions. But by and large, they take half, and then of the half you're grateful to have left, 10%, whatever that part you spend, add 10% because that's GST, goods and services tax. I mean, it is on an international basis. It's a pretty serious impost of tax, I promise you. So what happens to Trump? Well, he's got a few things about him that you can say you don't like, and he's now facing this impeachment inquiry, which, in my view, is a total joke. But the real joke is that the Republicans have failed to identify how to defend the guy. I mean, the way I would look at it, Trump comes to me. The argument is this is over the issue of asking the president of, slip the word now, Ukraine. The president of Ukraine to investigate possible claims of corruption against Joe Biden, who was then Obama's vice president. Well, the internet roared, and all of the Democrats screamed and yelled. Now, remember, these are the people who've been screaming and yelling about the Russia interference, which was a total hoax, and waiting for Mueller to convict this guy. And when that failed, now they've got, it's the phone call to the president of Ukraine, telling him that his funding from the United States, his grants have been cut off, and he won't be getting them until and unless he agrees to investigate Joe Biden's dealings in Ukraine. Well, you see, that's not true. Uh, the only part of it that's true is that the Democrats have been trying to find, they've been a chase in search of a crime that they could hang their hats on. I mean, it was Russia for 2.5, 3 years. Now it's Ukraine. I mean, it's totally ridiculous. But what concerns me is that no one seems to have got around to enunciating the defense for Trump. And the best we hear is, look, the president of Ukraine didn't know that Trump had decided and instructed his people to withhold the multi-million dollar grant to Ukraine at the time he made the request. So the Democrat case is he's using the power of the United States, his position as President of the United States, for his own personal benefit by asking these people to investigate a potential political rival. The Republican, the best they can come up with, saying, well, at the time, the Ukraine president didn't know that the US, that Trump had already told his departments to stop sending the money to Ukraine. So if they didn't know, how could there be a quid pro quo? Well, you know, if that's the best that the Republicans can come up with, it's a serious worry. If any of you know Republican lawmakers, for God's sake, get them to give a think to the proper approach. The proper approach to this is not that issue at all. That's shallow. The better issue is, not only did he talk to the president of Ukraine and ask him to investigate Biden, but it was his duty to do so. If, as alleged, there'd been corruption at the highest level, because we're talking substantial funds, it's inconceivable that Biden prides himself on saying, I cut off their money because they wouldn't, I threatened to cut off their money if they wouldn't replace the prosecutor who was prosecuting, amongst other things, looking at his son Hunter. But the real argument for Trump is not that it was wrong that he did it. The real argument is, in any event, there was no quid pro quo, we know that, but it was not wrong that he did it, it was his duty to do it. As chief executive of the biggest corporation in the world, the United States of America, wouldn't you think it's terribly important to know if your immediate predecessor or his supporters or his staff had been involved in a corrupt deal in one of your client countries to whom you are granting $400, $500, $600 million of aid every year? And isn't it important to understand whether the United States policy towards Ukraine made under Obama and Biden was affected by what Biden did? I mean, if you're the CEO of a large corporation or any corporation, and you find that your policies have been created by a previous CEO, perhaps, but that policy came for a reason to do with other things. In other words, did Biden's interaction with the Ukraine affect the US government's approach and its policies towards Ukraine? And the answer to that is clearly yes. I mean, I've always been totally confused about why the US would have the policy to Ukraine that it does, because, as you know, there's a breakaway proverb. Ukraine historically was a part of the Russia, and there was a revolution, a coup, to get rid of the previous president, and the Russians came in to the Crimea and partitioned half of the country. And the country that the US supported was undoubtedly corrupt. Their part of it, anyway. You see what I'm saying? That makes sense. Not only was he right in asking the Ukraine government at the highest level to investigate what had happened, but in fact it was his duty. Because if the US policy towards Ukraine was affected by any of those dealings, this government and the people are entitled to know. So rather than having some weak, namby-pamby defense, Republicans should be aggressive about this if they understood the real, what I've just laid out to you. Trump not only was right to ask the question, but it was his duty to ask the question. And if you look at it that way, then whether that advances his political interest or not is immaterial, because no doubt Trump has no trouble at all in looking after his personal interests. I mean, everyone knew what they were getting when they voted for him. He's a businessman. Money is his god. He's been very successful at it, and old leopards don't change their spots. He's a guy who thinks of himself first, second, third, and fourth. But I have no doubt that he's a true patriot and always has the interests of the United States at heart. So those of you who are friends with Republican legislators, tell them to get in touch with me, and I'll tell them I'll set out the argument for them. So let's move on. Look, if you haven't had a really, really good laugh this week, go to this link. This is a link from Vanity Fair, and it's a very, very in-depth but very clever write-up of what's happened with the We company. And I mean, this whole thing, if you happen to be one of the people who's got your money there, it's a total disaster. For the rest of the world, I mean, it's just hilarious. And, excuse me, for those of you that don't know, the story is that this young guy, Adam Newman, started a business. He started a few other businesses that didn't work out. He then started this business that goes on to be called the We Company. And he markets it as a tech company, and people seem to believe that for some reason. In fact, what its business is leasing out office space. Well, there's nothing new about that. But what this particular company's business is taking a reasonably long-term 15, 20-year lease on a building or part of a building, then refurbishing it because, according to Mr. Newman, all the value and benefits come from making this a really sexy space. It's got some free grog, free coffee, particular, virgin coffee beans, whatever you want, sort of stuff. And he got hold of Son, the boss of SoftBank, who are totally obsessed with unicorns. That's the business of SoftBank, backed very largely by the Saudis. And the Vision Fund number one had $100 billion odd to invest. This guy Newman did a wonderful sales job, not only on him but everyone else around him. They were all drinking the Kool-Aid, this has been going on for a number of years. And when asked not so long ago when the company was likely to become profitable, he said, well, we're not interested in profits. We're following our mission of raising consciousness in the world. Well, in the process along there, Newman had done things that if this was a listed corporation would, in other countries of the world, would certainly have got you in jail. But apparently the concept of conflict of interest hasn't permeated American boardrooms very much, because what this guy was doing is he was borrowing money from the company and also raising borrowed money on his shares, and he was using that to buy the buildings, which he then leased back to the company. So he had the asset personally, bricks and mortar, prime position, and the company had the liability of having to pay the lease. More than that, he was an expert apparently at selling. This is hearsay, so do your own research. But it's apparent that he was busy selling large swathes of his shares at the same time as he was doing new investment rounds and asking everyone else to put in their money. Anyway, cut this whole thing short. At some stage, it was to IPO last month, and in preparation for the IPO, they were talking about a valuation of $47 billion with the B dollars. And of course, one of the great things Newman talked about all the time, he had the Steve Jobs shtick down to perfect, wear the black T-shirts and get the microphones on and speak in front of you see very, clever when you're going to speak in front of some background. Make sure they're all tech companies, because you're pretending to be a tech company, whereas in fact what you are is a real estate company. And in the middle of all this, or early on, he got hold of the copyright of the word "we," and he sold it back to the company for over $6 million. Of course, that was too hot even for the directors of We, and eventually he had to undo that deal. But this guy is a living example of the old adage: if you owe the bank $100,000 and you default, you've got a problem. If you owe the bank $100 million and you default, the bank's got the problem. Well, this is exactly the same. He has SoftBank in for just massive amounts of funding, and in the pursuit of consciousness, that was their motto, raising consciousness. They made a bad mistake, because they actually had to put some serious figures together to get the IPO off the ground. And that raised the consciousness of potential investors who were looking at these figures from the outside. And when they saw how much money this company was spending, which spends basically $2 for every dollar of income, they puked all over it. The IPO was cancelled. The valuation has notionally gone from $47 billion with a B to $8 billion. I mean, I can't understand how it's worth $8 billion. The worthwhile, solid, real assets are owned by the Newman, who's now lost his CEO position, but he's still executive, or maybe non-executive chairman. When this disastrous thing all happened, SoftBank had to bail him out. The money that they paid him to get rid of him is just unbelievable. So do read that story. You'll have a big laugh over it. I mean, the stupidity, the gullibility of folks. And we've seen this with Uber and Lyft and Snapchat, and it's all blue sky until they get listed. And once they're listed, then the accounts have actually got to be, I won't say they've got to be accurate, but they've got to be a lot closer to accurate than when you're just spruiking them numbers and pulling them out of thin air, because what they're doing is selling a dream, selling potential. This is where we'll get to. This is where we'll get to. Fine, but the problem is you might well die before you get there, or at least in this case go broke, which is what's happened to this turkey. But he's not broke. Everyone who's touched him is, but he's fine. He's got all the money in the world. A good Jewish boy, made sure he looked after himself first and foremost. There's something for you to really think about. Okay, let's move on. But our trading this week, gold. This is the fourth seal, which not many of you get for some reason. I know we have an awful lot of people at this site who are true gold bugs. They're very, very interested in gold, but they don't get the fourth seal, which is our forecasting, long-term forecasting service. And you can see from these are largely prepared now by a chap called Frank DB, who lives in Belgium. He's a farmer when he's not being a trader. And he came to a tutorial in Taupo some number of years ago. It could have been 2010 or thereabouts. A lovely young chap, and he brought his fiancée with him, Anne, who was a lovely lady. They're now married with 2 children. But he came to me and he said, I've never seen a financial chart in my life. But he was moved by where the Daniel Code comes from. He's a very religious man. And he was very, very interested in learning how something written in the Bible 2,600 years ago could have any possible influence on markets today. And what he took a particular interest in was the fourth seal, which is our long-term forecasting method. And it's done on some long-term charts. You can see this is the 24-day chart of gold. That is, if you like, the Daniel Code monthly chart. Each one of these bars is 24 trading days. And the red line, diagonal red line, you see going from center left up to the right up the high, that's a fourth seal line, and that's a point at which there is support or resistance. In this case, resistance. And the very next month, you had two important time cycles expiring, the 59 cycle and the 62. Now remember, we're talking 59 months effectively, or 62 months. These are very, very long-term charts. And what I've put for you above here is what Frank's comment was. This came to us on Monday. He posted on Monday. Gold still moving sideways, trying to rally, really going nowhere. We had a 59.62 cluster cycle top last Friday, and start a 44 cycle top on Monday. We're again at an inflection point for gold where we could see another major turn. This market is rallying, but we're on alert for DC sell signals that predict the swing high and give us a turn back down. Any long positions here should have tight stops. Well, you can't be more prophetic than that. And here's the latest chart of the fourth seal by Frank DB. And the success as well, that Monday gave you the high, Tuesday, Wednesday, well, Friday gave you the high, Monday, Tuesday, Wednesday, Thursday, Friday, late last week, right at the top where those numbers were, came the little interim high. Sell signals from the Daniel code, and sell signals in success, and I think also, yeah, a sell signal for silver on Tuesday. We had a sell signal for gold on Monday, valid for Monday, Tuesday, and Wednesday. And that was a TO3 signal, and we also, of course, had the success signal. So if you didn't see that sell signal, then you're really not looking at anything. And here we are, just simply 1, 2, 3 days later, $3,800 has just jumped in. Easy enough if you know how, isn't it? Here we are. What Rob's given me here, the value of Wellington. Oh yeah, there's another one. The value of Wellington Cloud Software Company, Xero, has topped 10 billion after its shares surged on the Australian Stock Exchange, and it still makes a loss every year. Excuse me. In the multi-millions. Rob, thank you. I mean, you know, to rational people like Rob and me who've been trading for years and years and years, this is all cloud cookie land. It's fantasy. But boy, I can tell you there's a lot of fantasy in the market at the moment. But who was the guy? Was it the head of, wasn't it? It was Lehman, or one of those notorious companies who said, we know this is market to bubble. This was in 2007. We know equities are in a bubble, but you know, while the music's playing, you just have to dance. Well, they were dancing all right, but when the music stopped, they couldn't find a chair quickly enough. And that's what's going to happen here. Make no mistake about it. What built into these markets, particularly anything to do with technology, the potential, the dream they've been sold. They've got some reason for it. They say, well, look what happened to Facebook. Look what happened to Google. You know, what happened if I bought many, many years ago those markets? Microsoft could have bought those markets for a song. Look at them now. Yes, and then think of all the other ones who've failed. But there's just such enormous hype in the market, such enormous optimism being pushed along by everyone who's a bull, I guess, and certainly helped by the most lax financial fiscal settings that we've ever seen. And it's got higher to go, probably, but boy, you know what Nancy said, remember November. You know, I mean, if the socialist crackpots get up as Democratic nominees, and I find it really, really hard to believe they will, but, you know, if you get Elizabeth Warren as the nominee, if there's even a shout of her or old Sanders, even a shout of becoming president, the stock market's going to have a heart attack. Make no mistake about it, it will, because the hype is into the nth degree everywhere. You see, all over the world, as Rob just pointed out. Ridiculous. But there you are. Hope springeth eternal, and at the moment it springeth very strongly indeed. Anyway, there's the easy money and the success and the TO3 signals for this week. So if you didn't get the money, there's $3,700 you could have had in your pocket. And let's see what else has happened. This is coffee. Earlier in the week, I had a chat to Prince Daniel, who's not with us at the moment because he's in Dubai, so I imagine he's sound asleep in the middle of the night. But I know he follows these anything the Daniel Code very strongly, and he'll be having a look at this, no doubt, when he wakes up. So this is coffee. I had a conversation with Prince Daniel. He's been trading palladium, which has had a bit of a consolidation the last week or so. He's very unhappy with it, and he wanted to go look at other markets. And I said to him, gold was going quite well, coffee was going great, US T-bonds was going great, and natural gas. And this is coffee. This is the 6S, 6 seal signals, which very few of you are using for some reason. I'm not quite sure why that is, but for those who are, they're just counting the money. Have a look at this. We've been on the right side of this market all the way up, and now in the last 1, 2, 3, 4, 5, 6, 7 days, it's really put on a nice serious burst, and we've taken excuse me, morning hay fever. Bear with me, folks. We've taken 3,300 out of it in the last 5 days. Pretty fantastic. And this is, I told them to have a look at T-bonds. Well, we don't usually think of T-bonds as a big earner, but have a look at this. This is the 6S signals, some of which were also TO3 signals. Let's have a look when they came, let me tell you. We've been all over this market. Let's look at the book. T-bonds, sell on Friday. And there it is. Thursday, Wednesday, Tuesday, Monday. There's Friday right at the high. And the signal was created on Thursday night after that big up bar. On Thursday night, valid for execution Friday or Monday. So there was a TO3 sell. That's just put another $3,700 into your pocket. And if you look at what we've been doing with the 6S signals, they're extraordinary. There's been some part of $9,000 just in this move down recently, and for bonds, for T-bonds, that's great trading. And of course, the reversals, our losses are substantially smaller than the wins. The losses average less than 50% of the wins. So you can see there's a failure there, and we actually made money on it, as I remember. So you can be wrong and make money with this system, which is very nice when it happens. It doesn't happen all the time, I'm not saying that, but it happens often enough. And when you do have a losing trade, it's modest. It's modest. Occasionally we get whacked. We got whacked this week with something a bit strange that I've forgotten, where you weren't on any reduced stop. You had the full exposure of a daily bar and got hit today. But anyway, those things happen. Let's see. So we're doing a live tutorial at the Gold Coast next week. If you want to come, you're still welcome. A bit hard for most of you because you got to get to Australia. That's the first step. But anyway, if you're close enough and want to come, you're very welcome. I'd love to meet you. So we're having a meet and greet on the Wednesday afternoon. We're right on the beach, very lovely. Looking at the ocean. Then teaching Thursday and Friday. Thursday night, I'm taking everyone out for a group dinner somewhere very interesting. And of course, after each teaching session, we have some drinks and some snacks and shoot the bull about trading or other things you might be interested in. However, if you can't come to the live tutorial, which are very infrequent, you can do a video tutorial with me one-on-one anytime you like. And it takes about 4 or 5 days of teaching, and then it's over to you. Depends how quickly you can do the paper trading that I ask you to do, because I promise you, the people who do the most paper trading finish up being the best traders, because you see everything that the market can do to you, you know how to react, and you're not surprised. So if any of you are interested in doing a video tutorial, or indeed coming to the Gold Coast tutorial next week, shoot me an email straight away, please. If you don't want to, I'd be more than happy to call you, discuss your trading, discuss your ambitions and what it is you want to achieve. For those of you, excuse me, who have not already had a free trial of the Daniel Code, you're most welcome to. Just click on the free trial banner at www.thedanielcode.com and get a username and password. And we're happy for you to have 14 days access for your free trial to everything on the Daniel Code website. You can read about the fourth seal and all the possibilities that it possesses. In addition to that, we're partners with Genesis Trade Navigator in Colorado Springs. If you are not using their software, I can certainly recommend it, and we can organize a free trial of that for you as well. This is our compliance statement. I always want to show you that. I always want you to read it, because I promise you it is very, very easy to lose money in the market. If you don't know what you're doing, you will lose your money. I think the old saying is that 90% of new traders lose their first bank in 90 days. My experience is that 100% of new traders lose their bank in a lot less than 90 days. You must learn how to trade, and I thought, being an attorney, that you could learn from books and lectures and a bit of practical experience, and turns out that's not true. But you can learn from the Daniel Code. I've taught a number of people who are all, if they are still following the rules, are extremely successful. So that's it for today, folks, and thank you for being with us. Let's see what's happening here. Nothing, no questions, everyone's happy, and enjoy the weekend. It's Friday down under in the Gold Coast. It's 12:30, and it's got hot. Murph, it's got hot. That means it's time for a Bloody Mary by the pool. Okay, thanks for being with us, folks. I look forward to talking to you. It won't be next week because I'm doing the tutorial. It might be the week after. John L. from Coffs Harbour, on his way to the Gold Coast next week. Looking forward to meeting you, my friend. All the best. This week, eh? Good on you. All right, I'm looking forward to meeting you. All the best, my friends. Bye-bye.